Welcome to the deep dive. Today, we're diving headfirst into some really significant shifts we're seeing in the cryptocurrency market.
Yeah, based on some brand new data.
Exactly.
Mm.
And you're here because you want to get informed and get informed quickly. So think of this as your fast track to understanding what's really been happening lately in the crypto world.
hmm We've got some fascinating and, frankly, quite startling information to unpack today.
Okay.
Our main sources are the comprehensive data from CoinGecko. They're kind of the go-to independent crypto data aggregator.
Right. Everyone knows CoinGecko.
Yeah. And we also have some really interesting insights into platforms like pump.fun.
Okay.
So our mission today is essentially to sift through all of this and pull out the key insights, the stuff you really need to know to understand the current landscape.
And maybe find a few surprises along the way.
Hopefully, yeah. Definitely some surprising numbers.
Okay, let's kick things off then with something that might seem a little, contradictory at first glance. We've seen reports suggesting that overall, the crypto market has actually been outperforming traditional assets recently, which is, interesting.
Right, we've seen that headline.
But when you dig into the numbers, you find this other really dramatic trend. A massive number of new cryptocurrencies have just vanished.
Yes, the sheer volume of this disappearance, it's quite something.
Tell us about the scale.
Okay, so get this. In just the first 3 months of 2025, an astonishing 1.8 million newly issued cryptocurrencies were essentially wiped out. Gone.
1.8 million? That's a hard number to even wrap your head around.
It really is.
Mhm.
And just to give that some context, CoinGecko's analysis shows that figure accounts for about 25% of all the tokens issued since 2021.
A quarter of them. Wow.
But here's what's maybe even more striking. Almost half, 49.7% to be precise, all the crypto coin failures ever recorded in history happened in that single quarter, Q1 2025,
Almost half in 3 months.
in 3 months.
Okay, so this isn't just like a minor blip. This sounds like a really significant event, a major shakeup. What does that kind of failure rate tell us?
It strongly suggests we're in a substantial market correction.
Yeah.
Perhaps even, a fundamental reassessment of what actually constitutes value in crypto.
A reassessment of value. Okay.
Yeah, because when you see that many projects just vanish so quickly, it's not just a few bad apples.
No, it points to something bigger.
Exactly. Broader systemic pressures. It makes you seriously question the initial hype around many of these tokens
Right.
and whether their valuations were ever truly sustainable.
Right. So what's driving this massive crypto call? Where did these millions of tokens suddenly come from before they disappeared?
Well, a really significant factor seems to be these platforms that offer a very, very low barrier to entry for creating tokens.
Making it too easy, maybe?
Perhaps. The data points quite clearly towards pump.fun, which runs on the Solana blockchain.
Ah, pump.fun. Heard a lot about that. Focus on meme coins, right?
Heavily focused on meme coins, yes. It's streamlined the whole process, create a token, get it trading almost instantly. And Solana's efficiency, the speed and low cost, definitely played a role in enabling this.
And the stats around pump funds specifically are pretty brutal, aren't they?
Brutal's a good word. Exceptionally stark. Tokens launched there have a failure rate hovering right around 98%.
98%.
It's an incredibly high figure. It basically means almost every token created there is destined for a very short lifespan.
So the ease of creation just bypassed any kind of quality control, any historical safeguards?
Essentially, yes.
Yeah.
It's like the traditional gatekeepers, if you could even call them that in crypto, were just completely removed.
Wow.
And think about this. Even when Pump Fun was at its absolute peak popularity back in November 2024, the survival rate for its tokens was still only about 1.67%.
Only 1.67% survived even then.
Right. And more recently,
Yeah.
we've seen that figure dip below 1% for several weeks running.
Less than 1%.
You could almost call these platforms high-volume meme coin factories. The focus is just quantity, rapid creation, quick trading, not underlying quality or any kind of long-term plan.
Yeah, that paints a picture. Okay, so these factories are churning out tokens that mostly fail. But it's not just about these new, easily spun up tokens, is it? The whole market's been pretty volatile.
Oh, absolutely. Q1 2025 was marked by some really considerable price swings across the board, even for the big players like Bitcoin.
Right.
And that kind of market turbulence, that general uncertainty, it's particularly damaging for newer tokens, the ones that haven't built up strong fundamentals or active communities or, any real use case yet.
So when the market gets shaky, investors tend to run for cover. They ditch the newer, riskier bets first.
That's exactly what we typically see. It's often called a flight to quality.
Flight to quality, okay.
Investors tend to move their capital towards more established, maybe larger cap cryptos, or even just into safer havens like stablecoins.
And that pulls the rug out from under the new tokens.
Precisely. That lack of investor interest puts huge downward pressure on their prices. Prices fall, which triggers more selling. It becomes a vicious cycle.
A negative feedback loop.
Exactly. And often that just leads to the whole project being abandoned. Poof.
And it sounds like a huge portion of these disappearing tokens were specifically meme coins.
The data really points strongly towards a massive downturn in the meme coin sector. Some analysts are even calling it a catastrophic collapse.
Catastrophic collapse?
On average, we've seen over 2,000 meme coins just disappear every month.
2,000 a month?
Yeah. And the overall mortality rate, the death rate for meme coins, it's a staggering 97%.
97%? That's just devastating for anyone invested in those.
It is. It means the vast, vast majority of investments in that specific sector likely resulted in near total losses. It really highlights the risk, doesn't it, when an asset is driven almost entirely by social media buzz and sentiment.
It certainly does.
And while we've seen some recent attempts to maybe revive interest, things like BONK, other platforms popping up, these could very well just be kind of last gasp efforts, trying to recapture that fleeting hype before a more widespread decline really sets in.
Because fundamentally, most meme coins lack, substance.
Exactly. The fundamental challenge is the lack of real utility. Their value proposition often relies purely on hype and that greater fool theory.
The idea that you can always sell it to someone else for more.
Right. Buy an overvalued asset hoping to find someone even more willing to overpay, but eventually you just run out of fools. The music stops.
Okay. So let's try and tie this all together. We've got this massive wave of new tokens vanishing, millions of them, fueled partly by how easy it is to create them on platforms like pump.fun.
Right, the meme coin factories.
Amplified by general market volatility, shaking out the weaker projects.
Yep.
And hitting the meme coin sector particularly hard at that 97% failure rate is just mind-blowing.
It really is.
But you mentioned at the very beginning that the overall crypto market has shown some strength recently. How do those two things fit together? It seems contradictory.
It does seem contradictory on the surface, but it's actually a really key point to understand the current dynamics. Remember, CoinGecko, our source for a lot of this data, tracks over 16,000 crypto assets. They're the biggest independent aggregator.
Okay.
They also reported, remember, that huge 700% surge in crypto revenue in Q4 of last year.
Right. End of last year was booming.
So many analysts were actually expecting some kind of pullback or consolidation after that kind of crazy growth. It couldn't go up that fast forever.
Makes sense.
And alongside this token extinction event, we've also seen Bitcoin trading up near, $95,000?
Yeah, holding strong.
And the NASDAQ crypto index has actually outperformed both the S&P 500 and gold recently.
So the bigger, more established sort of blue chip cryptocurrencies are doing okay, even thriving in some cases.
Exactly. So this apparent contradiction, the overall market resilience, or at least the resilience of the established players, alongside this mass extinction of new speculative tokens, it really highlights this ongoing market correction.
Okay, so it's a sorting process.
It looks like it. A significant shift in investor behavior. It seems investors are becoming more selective, maybe more discerning.
Focusing capital on projects with stronger fundamentals.
Potentially. Or at least ones with more active development, clearer use cases, bigger networks, and moving away from the highly speculative, often very short-lived tokens that just flooded the market.
Okay, so to quickly recap then, we've seen this absolutely unprecedented level of cryptocurrency failure.
A huge number, yeah.
A staggering number of new tokens, gone in just Q1 2025. Platforms making token creation incredibly easy, especially for meme coins, played a big role.
Like comp.fun.
And then the market's natural ups and downs just accelerated those failures.
Definitely weeded out the weak ones.
And while the major cryptos are showing strength, that meme coin bubble seems to be, rapidly deflating, maybe even bursting.
That seems to be the case. That 98% failure rate on platforms like pump.fun and the 97% overall death rate for meme coins, those numbers really tell the story of this dramatic shift.
So, as we wrap up this deep dive, it really leaves you with some things to think about. Considering this massive extinction event happening in crypto, what does this tell us about genuine long-term viability? About the fundamental value of different types of crypto assets?
Big questions.
Yeah. And what questions does this raise for you, our listener? about the future path of digital currencies and maybe about the proper role of speculation in this constantly evolving space. Something to ponder.